Hi, everyone, and welcome to UBS Trending. Happy New Year to all of you. I'm your host, Anthony Pastori. So back in November of 2021, CIO published the annual Year Ahead report titled A Year of Discovery. And as we enter this new year, investors are looking for guidance on the best ways to position their portfolios to navigate these extremely uncertain times. So today we're going to discuss our outlook for the year ahead in healthcare and the short and long-term impacts of the COVID-19 pandemic, which we're all still dealing with today. So joining me now from the Chief Investment Office is Eric Potiker. Eric, thank you so much for joining us. It's great to have you here joining on the show.
Sure. Happy New Year, Anthony. Thanks for having me.
Yeah, sure thing, Eric. So, Eric, look, we're nearly 2 years into the pandemic, as I mentioned, and we're now dealing with Omicron, the latest variant, and we can see that it's having a major impact on businesses, on how we all celebrated the last holiday season. So it's continuing to dominate headlines. Maybe you can provide us with a bit of a high-level overview of the impact that the pandemic has had on the healthcare sector as a whole, in addition to the various subsectors that you cover, especially in the near term.
Sure. I think, overall with the way the market has looked at, at the reopening and then shutdown cycles and trying to predict those, I think healthcare investors have struggled to try to think about healthcare within that context, and healthcare has been somewhat on the periphery during that. I think within healthcare, probably the sector that is impacted mostly by, or has had the greatest impact, is the medical device sector, because there you do have medical procedure volumes that are impacted by hospital capacity, and with a growing, increasing wave that we've had, multiple times over the last 2 years, then you see hospital capacity strained and deferred medical procedures, and that does impact the medical device sector. In the rest of healthcare, probably impacts are less. Are felt a little less severely. The life sciences tools sector has done very well with both COVID tests and with the underlying services and products they provide for vaccine manufacturing. And beyond that, the impact's been pretty limited. But I think healthcare investors and generalists have also struggled just trying to both forecast the underlying earnings and value those earnings, given the volatility that the various reopening and then shutdown waves create, and just trying to understand, what kind of multiple to put on COVID testing or even vaccine supplies and services that, eventually are going to wane over time. So I think that's been the challenge for investors, is really trying to value some of these shorter term dynamics and at the same time forecast what earnings and growth are going to look like during the pandemic and as we come out of it, hopefully.
Right. Yeah, of course. That's what we're all waiting for, is to see when this next wave of the variant Omicron will be over and we can move on. And then, obviously, as we know, there's a lot of unknowns that are happening right now. We don't know how many other variants might happen. So, really, when you think about healthcare in even the long term, it's a little bit unknown. So the question is then, Eric, what can we expect as far as that impact from COVID on health and the demand for related healthcare services and products?
And the underlying demand dynamics really shouldn't change longer term for healthcare. And I think what we're likely to see in certain sectors within healthcare is sort of increased spending, certainly on future pandemic preparedness and more broadly on healthcare and medical research. And you see that in the proposed NIH budget, which had a significant increase over the prior year. You see it in parts of the administration's Build Back Better program, which, if it does end up going through, does have additional spending on pandemic preparedness and testing availability. I think all of that supports the long-term underlying growth dynamics within healthcare. I think we're likely to see some pent-up demand roll through as deferred procedures end up still needing to be done, and that likely takes many quarters to play out. So I don't think it's going to be a bolus of procedures that we see during any 1 or 2 quarters. But I do think the underlying demand should remain strong. And then there's the possibility longer term that the long-term impact of COVID does have a sustained impact on people's healthcare consumption. And that could be particularly mental health services with some element of PTSD that broadly could be experienced throughout the U.S. and global populations, and that could manifest itself in greater healthcare demand over time. I haven't seen any of that yet, but I think there's a possibility that we'll see that over the coming 1 or 2 years once the pandemic goes into an endemic phase.
Interestingly, Eric, from an investment perspective, and I want to ask you about that, we did a survey here at UBS in the third quarter, the Investor Sentiment Survey, and 67% of those who were responding said that they were interested in adding healthcare to their portfolios, a healthcare exposure. Meanwhile, we've seen that healthcare as a sector has actually underperformed a little bit through this last year. So from an investor side, what are you recommending for investors when it comes to healthcare? And are there any particular developments or innovations that you think might be of interest to them as of right now?
Right. So healthcare is inherently an innovative industry, as we know. And if you just look over the last 8 years since 2013, there's been over 70 billion of IPO funds raised during that period. And so that averages out to a little bit under 9 billion a year. And that compares to the period prior to 2013, when, in a typical year, you'd have under 2 billion of IPO proceeds raised. So that significant uptick that started, almost a decade ago and has continued to accelerate through the 2 years of the pandemic, really underscores the kinds of innovation that are possible out there. But it also underscores the amount of money and the amount of risk that's out there in early stage biopharma IPOs. And really just in the last 2 years, there have been over 190 biopharma IPOs that have hit the market. And that's, again, during the pandemic. And those are at ever earlier stages. So it used to be 10 years ago, you couldn't have a biotech company come public unless it had phase 2 data, so proof of concept in human clinical trials. You're seeing at least half the IPOs in biopharma over the last couple of years are occurring at either preclinical or phase 1. So before there's really proof of concept. So inherently, that means there's more risk in these companies because they haven't yet hit proof of concept. But at the same time, there's the immense amount of capital that's gone into the space, paves the way for significant innovation down the road. So the opportunity is there, but the risk is also there. And I think the way I would recommend investing in, or at least investors consider investing in and tapping into that innovation, are really through two different paths. One would be through the life sciences tools companies that really provide as I said, the tools and the services that go into this R&D. So if you think about that $70 billion of IPO proceeds that I just mentioned since 2013, much of that money, almost all of it, frankly, goes into clinical trials and research. And the companies that are providing the tools and the services into those trials have been benefiting for the last 8 years and will continue to benefit, I think, for the next decade. So I think that's a very attractive, diversified way to tap into the growth that's going into biopharma. The other way to play it is to frankly look at all the money that large biopharma companies, but what the large cap ones are spending on R&D. Collectively, they're spending over $100 billion annually on R&D, and that goes into early stage products, late stage products. It also goes into the kinds of investments and partnerships they do with earlier stage biopharma, and to some of the M&A that they do. And those companies, those large biopharma companies, are trading really still at historical discounts relative to the market, in a really very cheap way to tap into that innovation that we discussed. So I rather than taking a rifle shot approach and betting on a specific early stage biotech company, I'd rather play it through a more diversified channel, if you will.
Right. Thanks, Eric. Yeah, so it sounds like healthcare can actually play a valuable role in an investor portfolio into this year, especially with those defensive characteristics that the sector actually brings. So thanks for sharing that with us, Eric, and it's always good to see you here on the show. Great to have you.
Anthony, thanks. I appreciate the time.
Yeah, Happy New Year, Eric. Thanks again for joining.
Happy New Year.
And for more information and to access that CIO Year Ahead report, again, which is titled Year of Discovery, you can visit ubs.com/views. And make sure to follow UBS on social media. We are on LinkedIn, Facebook, Instagram, and Twitter. And plus, you can check out past UBS Trending episodes on demand. And as always, if you have any questions about your portfolio, make sure to reach out to your financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great day, and remember to keep your eyes on what's trending. We'll see you soon, everyone.